Hello and welcome to the Crypto Beat. My name is Tim Copeland and I'm the blog's head of growth. You might have noticed that's a slightly different title and I haven't exactly announced it yet, but I will be doing it so soon. But I will be keeping on with the podcast. Now, joining me today, we have backed co-founder Adam Levy. Welcome to the show. How are you doing?
I'm good. Thank you for having me, Tim.
Awesome. Before we get started, just a quick note, if you are hiring in crypto, you should check out Campus. It's a crypto knowledge test that picks out your best candidates so you don't waste time hiring the wrong people. Head to theblock.co/campus to get a 3-month free trial. Now, today's episode is around tokenized equities. But first, Adam, I saw you were in Token 2049 for the last week, as was I.
Indeed.
What were your main takeaways?
Well, first of all, it's obviously kind of still a bull market, just the sheer numbers that showed up, we had, I think, 15,000 people there. It was crowded.
I think it was 15,000 tickets. I think 11,000 people from what I heard.
Okay. So it was quite remarkable. There were a lot of people, a lot of momentum, a lot of people building, also a lot of momentum about tokenized equities that we can speak of. But I think in general, it's very obvious that, the space is not stopping. With all the kind of new regulatory and more kind of government embracement, I think we're moving very quickly.
Were you surprised to see so many crypto AI projects there?
Well, no, I think we've been having this kind of AI narrative for the past, year or so. And I actually thought that it's actually a bit declining kind of in crypto AI at the moment. It used to be kind of, I was getting 5 new crypto AI projects a day, like to look at. So I think now it's a bit slowing down. Maybe consolidating is the right word and not slowing down. Maybe we're just getting the good ones in.
Potentially. So how long have you been working on tokenized equities?
So I've been working on Backed for 4-something years now already. I think for me, when I started Backed, the main theme that I saw is that stablecoins were the first product market fit for crypto, past, let's say, Bitcoin. And I was looking for the next kind of asset class that I think will be interesting to tokenize. Because for me, stablecoins in a way is just a reward asset, right? It's a tokenization of the dollar. And I was trying to understand why the kind of stablecoin succeeded so well versus other tokenization projects that were trying to do real estate or art and similar things. And for me, it was mostly around the liquidity of the underlying. So I was very, the theory was that because the underlying asset, which is the dollar, is very liquid and you have very good price discovery. In the case of the dollar, it's trivial, it's just $1. It's easier to bootstrap liquidity on chain, where if you try to bootstrap liquidity for something that the underlying is very liquid, like whatever, a building or a piece of art, it's going to be very, very difficult. So I was trying to kind of assess what is the most similar kind of thing you can do. And the obvious thing is kind of tokenized Tesla or tokenized Coinbase, things that are very liquid and have very good price discovery.
Yeah, I'm curious, what's the business model there? Because with stablecoins, it's quite obvious. Most of the money's in treasuries. They take the yield, and everyone else gets, the sort of stablecoin and effectively just sort of misses out on the yield. With equities, it's a little bit different. Obviously, there's sort of dividends, but you don't have the same sort of yield in the same way. So, what's the revenue structure or strategy there?
So I think the long-term revenue structure is not, at the moment it's mostly around fees on issuance redemption. I think there still could be a long-term revenue model that is in a way more similar to stablecoins by, let's say, lending some of the underlying, which is an existing market, lending equities. But I'm not sure we've come into a situation where it's very clear what is the long-term business model of this market. Sometimes it takes maturity to learn that.
Couldn't that be quite risky in a way if you think you're buying Apple stock, but you're only buying, I don't know, only 80% of it's actually backed by actual Apple stock?
Well, actually, no, because it's not. The backed model is that it's always one-to-one backed. We're not allowed to give you tokens. We don't have the actual sharing custody. And we're not doing lending at the moment. We're thinking it more as kind of a long-term option. Actually, like the lending of equities is considered very safe because it's fully collateralized, and it's more like a MakerDAO or an Aave kind of flow. It's always fully collateralized, and there is liquidation. So it's actually a very safe mechanism.
Yeah, giving me flashbacks to Genesis and
No,
it's
I
just
think that again, sometimes things could look similar from the outside and be very different in the mechanics, right? So when we, if you remember, there was a time that FTX were doing kind of like tokenized equities, but they were not even buying the underlying. It was pure kind of gambling. And so I think that, and we had before that we had Mirror that was even crazier, that was pure synthetics with kind of algo algorithmic kind of pegging that was not even stable. So I think we have to always be able to judge how things actually work. When USDC depegged, if you remember, so some people say, oh, it's breaking down. I was like, no, there's no way. Like, we know that they're holding they actually have the underlyings. It's actually very safe. Most of it is actually with BlackRock in US treasuries. So even if the banks collapse, it's fine. So I think you need to be able to have, or some people can have actual financial judgment on a product and how safe it is. And and if someone calls it a tokenized, two things could be called stablecoins, or two things could be called tokenized equities, and still the model could be very, very different, and the risk category could be very, very different. So you cannot compare USDC to, let's say, the Terra Luna USD, for example, right? It's
yeah, I guess a key thing is transparency. I guess it really highlights how important that is in developing these sorts of things.
Yeah, so transparency, and first of all, there's kind of regulatory frameworks as well, right? So we work under very tight regulatory framework, and we even have a prospectus in Europe making our products retail grade, and so we cannot like really move from what we are committed to the regulators, and we are under very strict scrutiny as well, and we're using also different kinds of let's say mechanism to allow the users to have kind of let's say insight to what's going on. For example, we're using proof of reserve with Chainlink that has kind of a third party with direct API access to our custodian, which reports on chain how many units we actually own. So you can see that we're one-to-one backed. So these are the kind of things that crypto allows, I think. That may even safer than TradFi. You don't have like your quarterly audit. You have kind of online, on-chain kind of stamp every day.
Yeah, it was interesting you mentioned about like the mirror and those sorts of things back in the day. I do wonder if we're ever going to have as crazy a sort of period in crypto as 2021, 2022, when you just had, and the collapse of Luna. Are we ever going to have like a bigger collapse? Is it possible, or is it, if anything, quite likely?
No, I think so. Yeah, I've been around since 2013, so I've seen things go up and down for a while now. And there's always kind of when things go crazy, and they go vertical, there is a lot of a lot of people that are easy to manipulate, and that tends to have kind of correct itself at some point, right? So I see I also will have another one. We'll see.
What's your prediction for which part of the industry it would be?
Yeah, it's hard to say. I think it will definitely. There are two things. There's the thing that is kind of making things start to fall, and then there is the things that are extra leveraged that could be fine, like they're not scams or anything. But I think in our case, you could have a situation where something like a lot of people being extra leveraged via sale or kind of master, and then ETFs that are leveraged Master and Musty and all of these kind of things. Like this could, again, even if all of these are super legit, once we're starting to see decline, it could just expedite it because it's a very leveraged position.
Do you think that the whole like strategy Bitcoin acquisition, you think it could potentially implode at some point?
No, I actually think that it's a very interesting position, and I think Saylor is kind of very good financial engineer. He created like very interesting products, but by definition, some of it is a leveraged kind of position, and when it becomes very big, it has the potential to kind of expedite any crash of the market and make it very aggressive. So we're hoping that's not going to be the case, but it's there. The potential is there, definitely.
Yeah, I think people were ecstatic to see him buying up to about like 400,000 Bitcoin. And then sort of once you start going beyond that, hit 500,000, people, the mood's definitely switched for at least a lot of people, whether now it becomes a thing that's, if it were to fail, would be devastating, and then actually becomes a bit of an overhang, as opposed to before it being, I think, a bit more manageable.
I don't think it's going to be devastating. Well, short term it could be devastating to the price, but Bitcoin survived, Mount Gox, which I still remember, and this was the only exchange for crypto, so it survived Mount Gox. It survived kind of the 2017 craziness. It survived FTX. I don't think we're in a position that anything that size could actually ruin Bitcoin or anything even close to it. So it could kind of create another winter, but that's it. It's not. I don't think it's Saylor can destroy Bitcoin, or even Saylor exploding can actually destroy Bitcoin. I don't think we're anywhere near this kind of position.
And this is sort of going back to like tokenized equities. They seem to be quite a big, talk of the town right now. Like, why do you think they're so hot right now?
Well, I think people understand after the stablecoin game. I think people understand that this is kind of the next game to be played, and they understand it's a very lucrative game, and they see this also as a very good way to scale crypto, right? If you think about crypto today being 3 trillion in total, right, and you want to kind of imagine crypto at 100 trillion, so okay, Bitcoin will 10x and whatever, but the only real way to scale this beautiful DeFi system that we've built in a way is bringing reward assets on top of it. And the best, or I think the easiest to imagine how they're integrated into our tokenized equities.
And where do you think the largest audience is for tokenized equities? Like, I spoke to the Aptos Labs CEO at Token, and he said it sort of, reasonably obviously, it's sort of everywhere that's not sort of the US, everywhere that doesn't have easy access to sort of, traditional equities.
So I see tokenized equities as kind of three verticals. One is, as you mentioned, I call it accessibility. So you think about LATAM, you think about Far East Asia, there are some places that don't have good access, right? That's it. And that's kind of an easy sell. These guys, they cannot access the market, and you give them easy access, and it's an easy pitch. The second, which I call crypto natives, is a generation that for them, trading tokens is the native way to own financial assets, versus if you compare this to, let's say, older people, because it's mostly a generational thing, they see banknotes as the main way to own financial assets. So I think there is a lot of people around crypto that if you offer them to own Tesla as a banknote, or offer them to own Tesla as a token, they prefer to hold it as a token, because they can send it everywhere, they can trade it 24/7, they can leverage it on Aave. It's kind of a better rails, and something that they are more accustomed to. The last vertical, which is the biggest, but probably the furthest in time, is kind of the the US institutional kind of market. I believe that hedge funds and the big brokers, they will also move to tokenized equities, but that's a more they have like a very all the rails are already there, and they have very strong rails and very strong network effect around them. So it's going to take time, but they understand it as well. They understand that they're using rails that are from the 80s and that they suck. I think we all know that. Everyone that is around kind of securities knows that this is 80s technology, right? I think most retail had the experience of doing an international wire at least once, so they know that it sucks, right? So they understand why stablecoins are better. But most retail never really saw how securities work in the back office. Like at most they traded on Robinhood, and there are tens of layers that are in a way obscuring all the how bad the infrastructure is. Speaking about like T+1, T+2, but paying agents and very weird and different things that are unnecessary today. And if you speak with like securities professionals, they understand that, but it's still very difficult to move the whole industry. So I think this is kind of the last vertical we're going to see.
That makes sense. And are there any sort of legal risks or considerations in letting anyone in the world be able to buy tokenized equities? I mentioned earlier, you mentioned earlier about being regulated. That's in Switzerland, right? If I remember.
So we backed is a Swiss company, and we are using the DLT law. We used to issue out of Switzerland. Now we issue out of Jersey Island, mostly because of taxation. And the taxation in Switzerland is very difficult for issuing. And we also have the prospectus with the FMI Liechtenstein passported to different countries in Europe. So as I said, we're very highly regulated. But I don't see any issue. The same thing could be said about USDC, right? You're allowing anyone to hold it. We are enforcing the OFAC sanction list, the blacklist. But I think this is where the world is going to. That's I think this is just better rails, and thinking about security tokens as people used to think about them like closed garden with a whitelist. I think it just doesn't work, right? It's too narrow. It's very difficult to scale. So I don't think we're going in that direction.
And how do you imagine AI agents will interact with tokenized equities?
So I think AI agents, they in the end they're trading to make money, right? That's kind of the main use case we see AI agent for today, and this just can help the AI agent scale. As I said, at the moment, the crypto market is still very small, and if you compare that like to major hedge funds that are trading huge numbers every day, I think if we bring a lot of tokenized equities, we basically scale the market. This will also allow AI agents to scale the market access that they have, and they can trade in much bigger numbers.
Are you guys working on any AI products at all?
So we're collaborating with one. Yeah, we'll probably announce that as well.
And what are your sort of plans broadly over 2025 to expand and sort of grow this market?
So I think it's pretty obvious that the market is happening in 2025. I think that we are going to see, at least for us, we started more kind of a DeFi approach because that's kind of the easiest to penetrate. But I think what we're going to see in kind of the second year of 2025 is the tier one players embrace tokenized equities, mostly centralized exchanges. I expect that you will see 1, 2 tier one centralized exchanges listing tokenized equities for trading.
What are the biggest barriers to the adoption of tokenized equities?
So it used to be regulatory kind of understanding or clarity, because even though we have very, let's say, strong regulatory framework, the US being so aggressive and so anti-crypto under Biden created crazy barriers. Like we were speaking with centralized exchanges and they say, okay, you have all the licenses, we have all the licenses, everything is fine, but the SEC is just gonna go after it. It doesn't matter, right? It doesn't matter if you're in the right or in the wrong. They're just gonna go after you because they're trying to kill everything crypto. I think what we've seen until now since Trump got elected is not even, it's not that we got a very good, clear regulatory framework from the SEC to tell us, okay, this is how you should do tokenized equities. There is no such clarity. But what we did get is we got clarity that, okay, as long as you do things in some, and let's say not cheating or not committing fraud, or and you do have a regulatory framework that is solid somewhere, we're not going to be crazy aggressive on the enforcement, and we'll try actually to accommodate. So I think a lot of it is not what's in the actual law, it's more in the attitude. And I think the attitude completely changed, like 180.
And once equities on chain, what more can we do with them?
So I think this is the really interest. It's not just having them, it's actually making them as the the new collateral, or the new kind of fuel for the DeFi machine, right? If you can start leveraging them and you can use them for different in different protocols, I think that's going to allow DeFi to grow very significantly. And the DeFi innovation has been pretty amazing, to be honest, and being very composable as well, which is something that we have, is not really there in the traditional market. So I do think that at the moment the DeFi is really blocked by just the sheer amount of stuff, or of underlines. So I think the next wave of innovation we're going to see will be around real world assets, or around tokenized equities.
And if the US regulations become clearer, how much do you see this market growing?
Well, I think like stablecoins are 200 billion, right? Out of it, like the kind of currency, US currency is around 30 something trillion, I think, if I'm not mistaken. I think public equities alone is 120 trillion. So I think we can expect in the next few years to be at least in the many billions for tokenized equities. If I have to bet, it's going to kind of overtake stablecoins at some point.
It's interesting. Yeah, that's going to be my next question. I spoke with Kraken's co-CEO Arjun Sethi recently, who did say that tokenized equities are going to be much bigger than stablecoins in size. I guess. Well, I was going to ask if you think that's likely, but I think you already answered the question.
Oh yeah. I think I share this vision with Arjun, definitely.
Do you have any thoughts on world liberty moving into stablecoins?
So I think in general, stablecoin have became like a very, let's call it, lucrative game. Like Tether is the most profitable company in history per employee. So everyone are going in this direction. But we need to see also like what is the real benefit, right? It's then we know what they're competing at, but I think we need more players that are actually building around this, for like Stripe and others for payments. That's more interesting than having another issuer for stablecoin, but at least for us. But yeah, it's probably the biggest game today in crypto, right? The stablecoin games. If you want just to bootstrap, you need hundreds of millions of liquidity.
Do you think stable coins that have yield will take off?
So this is an interesting question. We have, for example, tokenized treasuries, which is in a way stable coins with yield, right? That's the same thing. I do see that becoming like bigger and bigger in the future. There is still some regulatory barrier around it because it's basically turns it into a security in many ways. And the stablecoins are still easier to distribute, and also like the European regulatory framework, like MiCA makes it harder, and also even the US regulatory framework makes it hard. So if you're distributing the yield, it puts you on a different category. So there is a lot of barriers on the regulatory side, but yeah, I do hope to see yield-bearing stablecoins take over or become bigger.
What's the difference between providing tokenized treasuries and a stablecoin with yield in terms of one being a security and one?
No, both are securities.
It's just a question. You said you offer tokenized equities.
Yeah, we do, but it's a more of kind of
tokenized.
Tokenized treasuries. It's more of a kind of a narrative play. If you rebase it to $1, it's a yield bearing stablecoin. If you don't, it's tokenized treasuries. But the financial position is completely the same.
Have you thought about offering both products, which effectively the same different branding, and seeing which one finds more success?
Yeah, So we for some time we did, and we were actually working on that. I think that the stablecoin game, as I said, is so massive at the moment, and the players are so rich and so powerful that if you don't have, as I said, hundreds of millions to compete with them, I'm not even sure if it's worth your effort. Okay, so we were trying to focus our attention where we thought we have like better chances to win, and I think on tokenized equities, because this game, it hasn't been decided, there's no clear winner yet. I think this is more interesting for us.
And is there anything you think we should watch out for in terms of within the tokenized equities ecosystem for the rest of this year? Are there any sort of developments that you anticipate happening?
Yeah, as I said, I think the most interesting thing is like the coming together of the tier one players. So once you see the big players really, listing or creating tokenized equities, that's kind of the thing to look for. And being in the industry, I know that this is already taking place. People are already making these alliances and these partnerships.
All right, well, we'll keep our eyes peeled. That's all we have for today. I want to thank Adam for joining this episode. And as a reminder, the Blocks Newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the blog. Thanks.